G'day and welcome to the Off-Chain Podcast. Don here with you. Our guest today is Gijs, CEO and founder of Stablr, pioneers of the EURR, a euro-backed stablecoin. With the advent of MiCA, we're excited to talk to Gijs about stablecoins, the role in payment processing, seamless fiat-to-crypto conversions, and why a robust Eurostablecoin ecosystem is vital for fostering an environment ripe for innovation, growth, and unparalleled financial freedom. Let's dive in. How did you get started in Web3? Tell us a little bit about your origin story.
Yes, my start into the Web3 ecosystem. I used to be in payments. I co-founded a payment company in 2002 when the payment space was still a very fascinating and upcoming space. We were focusing on e-commerce payments at that time, so mainly how to pay online on e-commerce transactions. We built that company over time for more than 16 years. Then we sold the business, a large part of it, to a large Dutch bank. And at that time, when we had the payment business, we already built that business in a time when crypto came up. When I was in payments, I saw a lot of crypto opportunities come by, and I could understand the investment part. I could also understand the custody part of the business. However, for me at that time, the payment side of it was pretty hard. I could not understand why somebody would like to pay with Bitcoins because it's a volatile asset on a slow rails with high fees. So at that time, I thought, okay, it's a nice upcoming market, but I don't see the payment angle. That was my first interaction with Web3. I said, okay, let's see what's going on. Then we were, when we were taken over by a bank, I would say the only department of a bank where I went in voluntarily was the department working on blockchain, because I could see the interesting perspective of using blockchain technology into the traditional financial sector. I can give a good example there, is the open banking network in Europe. Banks need to be open, and the ecosystem should be available for everybody, and open banking, access to accounts, it's been part of a more regulatory framework called PSD2 in Europe. The regulator tried to enforce for banks to open up. Then the way to do that was every bank should have an API which you connect to. But for instance, in Italy, the banks thought, let's be smart. We have 500 different banks. We create 500 different APIs. Good luck getting into the Italian banking network. It simply didn't work out. The British did it very correct. They created a standard which all the banks to apply to, but you didn't have an open banking network. At that time, I could already see from my payment background that instead of taking it from the regulatory angle, you could approach the same problem from technology angle, and that's blockchain. Because if you go into the blockchain and do the same, you actually have to complete open, transparent network, which can be used for transactions globally. So that was really my first main interest into the sector, about what could be done there and what role could blockchain play there. And I get fascinated by it. I'm still, till to the day of today, I'm very fascinated about what blockchain can do for the whole space.
Okay, so from payments and startup into banking, and then really from the financial side, I guess, but then also in that technological sense, being able to see, I don't know, was it a writing on the wall for whether the banking system was, or was it just the opportunity that came with the different rails or technological, advancements or ideology perhaps that blockchain could offer? Was that more of how you got interested in that side of things?
My fascination, let's say it this way. I walked into a bank, I see what they were doing. I knew a bit about blockchain. I knew a lot about payments. I walk into the department, I talked to these people for 2 hours, and I didn't understand anything anymore of what I thought. Because you go into a blockchain perspective from a traditional bank. So what do? they start, first of all, the discussion, which, by the way, today came up again by the Bank of International Settlement, the discussion between permissioned and permissionless blockchains. The bank said, oh, okay, we only work permissioned, while the whole market is permissionless.
Yeah.
So they created a consortium, which is called, that time, the R3 consortium. But they were also the biggest investors in blockchain technology at the time. They invest a lot of money, but I would say on the wrong place. Because going a step back, it's same as the 30 years ago discussion, intranet versus internet.
Sure.
The whole market went internet, but for instance, the banks and the corporates, they also know, let's do intranet. We want to control it. That's not what the evolution is. So the evolution is, in my perspective, on permissionless blockchains. And still, as of today, the discussion is still ongoing in the banking space because banks want to do permission because they want to block off their markets and to keep the competitive angle as they always had. But innovation is in the permissionless space. That's what got fascinating. And then you see that banks cannot enter that space at that point. The regulators won't allow them to. So you've got a great technology opportunity. The main interest is in a sector which cannot work on it. That they are, in my opinion, and time at the end has told, on the wrong side of it, so that this is the space to be in, because here is a lot of innovation to be got. Bridging that to Stablr is looking then at which opportunities are there and where could we have an additional value. I think from an exchange perspective, there were people who could do it a lot better than I could. But I saw constantly the stablecoin angle coming through, especially from a European perspective. Mm-hmm. And I looked at it at 100 different ways. That's why I decided, okay, the stablecoin space is my space because it's closely related to payments. It's blockchain related. It solves the problem. So for me, it ticks all the boxes, and that's how I started it.
So obviously, like I mentioned before, in particular, like back in 2016, 2018, trying to use Bitcoin for payments was prohibitive back then, let alone trying to do it now. So you saw stablecoins, even back then, was it? Seeing stablecoins as a potential solution for kind of the unit of blockchain or the utilization of blockchain for payments? Is that the go?
I didn't see the Bitcoin opportunity. Let's face it there correctly. Stablecoins were still very small. Tether was in some kind of form in the market, but especially in 2020 onwards, when Tether started to rise, you really could see that case. Okay, this is a great opportunity and a great product. And as of today, I still believe that Tether is one of the most innovative products in the space, and because they created this complete market on their own, and that's quite an accomplishment.
Yeah, man. I remember back in 2017, 2018, when the market started to turn from the bull into the crash, and some people were taking their money or taking their crypto, for example, and cashing out, but leaving it in Tether, and others were very suspicious of Tether back then, and any stablecoins really, but in particular Tether, ended up losing actually a lot of money by not being able to, they didn't want to cash totally out. They wanted to be in the crypto ecosystem still, but did not trust stablecoins. Obviously, since then, there's been a lot of trust and a lot of new stablecoin activity and new stablecoins that have come out since then. Why are stablecoins still controversial today? Have they proven themselves?
I think still. I think the issue there is, what's a stablecoin? Right. Stablecoin is kind of an undefined term. In Europe, we pretend to say now, if you want to state it correctly, we have e-money tokens, which we call stablecoins, but actually that's a name within the regulatory framework. So anybody can call anything a stablecoin. I think a lot of the stablecoins which were controversial were actually just crypto assets. like a Terra Luna. If you call it a crypto asset, it's totally fine, because how many crypto assets do not survive in the market and do have a run on their assets? There are a couple of them a day who lose it. But because Terra Luna was called a stablecoin, it was an experiment called a stablecoin. It got a lot of attention, a lot of notes about. Tether, as of today, everybody is still doubting. There's still a lot of doubt about their backing. The thing is, when Silvergate went down, actually everybody at once trusted Tether again because they were the biggest. Yeah. So is Tether a stablecoin? Is it not a stablecoin? It's not a transparent stablecoin. Is it a European regulated stablecoin? That's the only thing I can say no on, because that's what they said themselves. They're not going to apply for a MiCA license. So, but looking at their quarterly revenue announcement, I think they've built a great thing in a great industry at a great time. But there will not be a regulated stablecoin in Europe as of now.
Right. So if stablecoins are a great solution to a big problem, or at least an innovative solution to payments, for example, for me, I think that they're at least one of the first killer apps for crypto in terms of like demonstrating a great use case for crypto. They're the most used cryptos globally. What do you think is what needs to happen, do you think, for stablecoins in Europe, for a US denominated stablecoin in Europe? What needs to happen?
For a US denominated stablecoin, what needs to happen? First of all, it has to be issued by a regulated issuer. So as of July 1st, every stablecoin should be regulated in Europe. So either it's a Euro or USD, they should be regulated. And then it's growing the opportunity. From my personal perspective, I've been in the space and selling solutions for 1.5 years, which I could say the first year was pretty tough, because everyone's, nice, Eurostablecoin, that could be something in the future. Call me in half a year, let's see. Then the space moved a bit till MiCA got in. Okay, yeah, it's interesting. Let's have another call next week. Until now, 1st of July onwards, I have a call. I can directly send them to onboarding, because people say, I want to have the solution. So it's so rapidly changing in the space. And if you talk then use cases, the first one is liquidity in crypto markets, in crypto exchanges. From the killer apps, all layer ones are looking at stablecoin solutions to be the next big thing. Yep. So we have a lot of layer ones around who don't have the real traction and focusing on, okay, what can we do with stablecoins? So it's an interesting perspective. Same as we see from a layer 2 perspective. And we see stablecoin exclusive layer 2s coming up to create more liquidity and a better flow of funds across the ecosystem. So that's very, very interesting for me. Crypto markets, from exchanges to derivative exchanges, collateral, are definitely the first use cases to gain traction in this market. But if you would ask me what's going to happen 5 years from now, the payment market will be bigger than the crypto market, also for stablecoins. Because even if you buy crypto, you still do a payment transaction. And buying crypto is not the only thing you're going to do in your life. So there's so many different perspectives in doing payment transactions with stablecoins, is that the stablecoin space is very important. This is the payment perspective next to the first adoption in crypto. So it will move over time there.
So one of the things that, a couple of years ago, started hearing about MiCA. MiCA, it was going to change everything, and lots of FUD, or at least concern about what MiCA might mean for blockchain technology, or crypto, I guess, more specifically, globally, even though it was really only for Europe itself. Can you help us understand what do you think have been some of the biggest effects of the implementation or the rollout of MiCA, specifically for stablecoins in Europe, but then also the kind of the knock-on effects around the world?
That's a good one. My question would be, how much time do you have?
Yeah, I mean,
it's about
it's massive.
Okay, let's start with the high overview. MiCA, okay, Europe always has been kind of a follower. When it comes to regulations, when it comes to government, Europe is a very complex structure of a union with countries who hardly decide anything together. But for some reason, they managed to do that in the crypto space by MiCA. So they are now front-running the regulatory side of the business, which is interesting, also from a political European perspective. But we are there, and this could become the blueprint of how regulation will come in Europe, from Europe to the rest of the world, because everybody is following MiCA in Europe.
Yeah.
Now, first we have the stablecoin angle. The stablecoin angle is a bit strange. It's the first angle because it impacts the banking system, so they want to be quick on that one. They don't want it to grow too fast without any regulation, and with implying the risks for the banking system. So that one is now enforced for the 30th of June, and it's the only part of MiCA which is implemented into local law. Because if you have the crypto asset provider registrations and licenses coming up next year, that's European law. Crypto assets will be European law. But only stablecoins falls under e-money institutions, which is already a current regulatory framework, and stablecoins is added to that. So it's a bit of a construction made there to be ahead of the general MiCA implementation. So what you see there is it's implemented into an institution which already longly exists in the European market. EMIs, e-money institutions. I think the simplest example of ones being a big EMI is PayPal. That's for me a classic e-money institution.
Yeah.
Issued e-money. Nowadays in Europe it's a bank, but it started as an e-money institution, but from prepaid phone card issuers to all debit cards, these days neobanks are pretty often operate under an EMI license. So it's a very broad scale, and now we added stablecoins to the part. By issuing the issuing of e-money tokens is an EMI activity. So that's now putting into this space, and that comes with a lot of questions. A lot of topics which are still current under discussion. One topic that we'll talk about that later is the fungibility of stablecoins in and outside of Europe, which is a complex topic on itself already. But the effectiveness of regulations, redemption plans, all those kind of things are still part of an evolving regulation. Which is effective already today. And we, from a stablecoin perspective, are regulated. We've got it done, and we actively work with our regulators now to fill in those gaps and to provide a good compliant product there.
Do you think it was ultimately in the wash, if we can call it that, like in its implementation and how it's working now? Do you think it's been a net positive thing for stablecoins specifically, but crypto generally?
I think regulation is a good thing. You've got regulations, but you got all the ETFs. With all these steps, you see adoption. You see adoption in a broader scale than only a first mover market where people trade crypto and buy assets. Half of them don't understand what they are buying, but the volatility and the investment is the fun piece of it. It's a nice market, but it's not a sustainable market. For a sustainable market, you need to have a way broader access, which also the ETF brought. You need the regulations. You need some safeguarding around it. So I think it's very, very positive. And from your perspective, it's it's cool and amazing that they took that first approach by being the first mover by implementing such a big product in a union like Europe.
And as you say, other jurisdictions around the world really kind of falling into line with many of those regulations. What have there been any unintended or unforeseen knock-on effects from MiCA, either within Europe or in the crypto markets generally?
It's to really describe now knock-on effects. It's a bit early in the market because we're only 2.5 weeks ahead. So it's still, we're still in the excitement of being in this market and making the next steps. I think what MiCA could be a blueprint for crypto regulations if it's done well. Then many things should be done. But if you especially look at stablecoins, it's all about are the regulations effective? Is there is the fungibility of stablecoins handled? I think the challenge we're in is a stablecoin should be fungible. If you take the example, Circle's talking quite a lot about fungibility of stablecoins, is USDC issued by in one jurisdiction fungible with the other? Mm-hmm. The simple answer would be no, because they have different requirements. So is a red car fungible with another red car? Now, if it are two completely different cars, it's not. Uh-huh. So there is a challenge, but the principle of fungibility should be there, because the beauty of blockchain technology is that we are in an open market. We can trade all around the globe. We can use the same protocols. It's fast, it's efficient. It solves a lot of our problems. And to say stablecoins are not fungible would bring you back to all kind of local domestic solutions, and you bring up all the hurdles we all together want to take down. So fungibility is very important there, and also for the knock-on effects. But if you make it fully fungible, then the regulations don't have any effect anymore, because you will issue in the most preferable jurisdiction the far more stablecoins, with a little in the strictest jurisdiction. You make it fungible, you trade it around. How do you don't have limitations on the blockchain, so you simply avoid the regulations there. So if we create the right balance between effective regulations, good fungibility of stablecoins to different jurisdictions, then I think if that happens under MiCA currently, then I think the knock-on effects would be big, because MiCA could be, for stablecoins, the blueprint of a global regulation.
Yeah. Do you think that in the central bank digital coins, digital currency phenomena is going to take off, or do you think that the incumbents like Tether are too big at the moment, or really they're just a drop in the ocean in terms of global currency?
It's a short question with many angles.
Yeah,
I would say taking the Tether perspective, could Tether be a CBDC for an emerging country? Could be interesting, because I think also the demand from local clients would be rather to have Tether with the non-transparent risk in there than their domestic currency. That has way more risk than the non-transparent risk of Tether, which has a proven background of 15 years, where if you go into an emerging country, that proven background probably goes back 1 or 2 months at most. Sure. So there's the opportunity. Looking at Europe, what happens if you create CBDCs in Europe? We have a digital euro project going on in Europe, but that has nothing to do with stablecoins or blockchain. That's a payment solution. It's more like a retail payment solution. In my opinion, it's more like competing with Visa and MasterCard than with stablecoins, because they want to gain a good position there and regain the European payment market from the large international card issuers. If you then go, if you would promote it as a stablecoin, then you give too much force to a government. It's too centralized. The government could decide where you can pay to. Everybody has insight in all your payments. You rather have that at this point with private companies, banks, than having that fully open, centralized by government. It works in China, but that's also because it's a different political environment than Europe is. And I think Europe doesn't have any incentive to move into the China direction there. So that's my point with stablecoins in developed economies. The privacy issues and government control limits the use case of stablecoins. And next to that, before you have now private companies issuing stablecoins, it's the first steps. Then you will have bank adoptions. That's currently in the discussion. Is it permissioned or permissionless? We know where the market is going, so that needs some more steps to be developed over the coming years. Then you will have bank adoption, and then you have central bank adoption. So for me, it's still pretty far away.
So why aren't the banks doing their own digital coins?
Because they're banks.
Part of the bank's purview is to retain control, and they want things to be centralized, and they want to have the control of it. How come we're not seeing a lot of bank digital currencies coming out to tackle the tethers?
Okay, first, because banks are banks. If we want to start innovation in this world, we normally don't start at banks. Banks are the real followers. It's look at the infrastructure of a standard bank. It's hard to change the banking space. It's also because there's no incentive, because they're making enough money already. Sure. There is not a real incentive in banking to change. I think that's why the Revoluts of this world really grow big, because they have a different perspective to banking, and they actually take it from a technology perspective and really try to solve the problems here. That's traditional banking doesn't have that incentive to do so. Regulators don't want banks to do that. It's like I previously mentioned, the permissionless discussion. It's still around banking that they were the first big investors in blockchain technology, and still out of today, they are nowhere because they are also held back by their regulators. Also because they are managing public funds. So why would they be the risk takers? So they are low in risk, technologically not that advanced. So what do you see? You see neobanks coming up with a lot of interest in the stablecoin space. They will be the first adopters. That will move on to large banks. But still, after 10 years, the permissionless discussion is not even done. So it will take a lot of time for banks to really take the position there. I think the interest is there. If I talk to quite some banks, also the larger banks, and they tend to have a real interest for the space because they also see solutions like ours solve part of their problems, like settlements over weekends, keeping the system 24/7 running and not doing office hours. That is already an interesting space for banks to be in as well. So they're looking at it, but the people I talk to always have the feeling, okay, I really like it, but where do I start internally? And the answer is, give me a couple of months, and then I will get back to you, because things are moving slowly. And I think that's where banks are, and that's why I think the market for stablecoin issuers is that exciting also from a payment perspective.
Yeah, man, I've got a bunch of other questions out of what you just mentioned to ask, but I'm really keen to talk about Stablr as well. You mentioned it a couple of times about how it's actually kind of meeting some of those needs or filling in some of the gaps, just like stablecoins had met some of the needs and filled in some of the gaps. What exactly is it that you're doing at Stablr?
We issue stablecoins. It's as simple as that. It should also not be more complicated. We issue stablecoins, and the good thing is we have our EMI licenses, MiCA compliant, so we offer compliant stablecoins in Europe. Why is that important? From the 30th of June, any stablecoin issued into the European market should be regulated. So we're one of the very few having that done, having reached that point. A main advantage we have is that we had the ability to be licensed before as a virtual financial asset, which I would say is kind of a e-money institutional license light. And so, but we were having that opportunity. So we're also able to already build a year before the actual MiCA regulation started to build a whole backup network. So we have our own infrastructure for minting, redeeming, our portals, our APIs, but we're also connected to the right banks. We're also connected to the right asset managers. That's important for two different reasons. First of all, you need to off-ramp your fiat to be able to issue stablecoins, because we start minting at the point we receive fiat, redemption the other way around. And so we need banking infrastructure with Swift, SEPA rails, and bank-owned payment rails to be better on the 24/7 minting process. And we need asset managers to hold our assets and to have that with the least concentration risks in the safest place with the lowest counterparty risk for our clients, because that's our backing and our product. So that's what we created ahead of MiCA, and now we're issuing stablecoins. First euro, looking also at the European US dollar space, because also dollars issued in Europe need to be regulated by a European entity. So, and there are all kinds of limitations to the amount of dollars you can issue, the amount of volume, the amount of transaction. So actually there's also a very interesting opportunity. And that are phasing out of the market, which the liquidity has to be replaced by others. That's our first really step into the market with crypto players.
So you're talking about one stable coin being distributed amongst many different parties, or are these bespoke stable coins per client or customer or party?
No, it's one stablecoin across the ecosystem. So we're issuing one, which is our EURR stablecoin. We're issuing into the space, and we don't issue to consumers directly because we believe if a consumer wants to have a stablecoin, you go to your normal venues like exchanges where you would normally buy it. You would buy there again. An issuer, it's not interesting from an issuing perspective. But we work with market makers, exchanges, all to get the liquidity into the market and to have an efficient euro stablecoin market with low spreads.
Yeah, I mean, one thing we actually haven't really done is define what is a stablecoin. Like, what makes it stable? I remember you mentioned Luna a little while ago, and I remember a friend of mine, co-worker actually, who looked at Luna, looked at UST, and thought this is not so stable. Started shorting not just Luna but UST itself, which proved incredibly profitable over time.
Right.
What makes a stablecoin stable? And in particular, thinking through the MiCA regulatory framework and the things that you're doing at Stablr, again, what makes it stable? Or are you saying we shouldn't call it anyway because it's really e-money, so we should stick to e-money and not think about it as stable?
No, the common name is stablecoins.
Yeah.
So we should talk about stablecoins. It's we could debate what is a stablecoin, but what makes a stablecoin stable? That should be, in our case, the fiat backing. And so we are not able to mint if there are no euros. If we don't receive euros, we cannot mint. Once a transaction is sent to our redemption wallet, we redeem for euros again. So we always have this one-on-one backing. And that's the security we have. We are transparent about it. We show it. We have done all audits to get it done, and it's the safe backing and the transparency which should be there. You can also trust a bit now on the regulator that actually it's audited by third parties. it's reviewed by a regulator. So the safeguarding around the fiat backing is there. In case of Terra Luna, it was just a gamble.
Sure.
Nobody knew what was there, how it was there, and if it was more, if it was less, if the concept would work. And for me, that's a crypto asset. It's like a crypto asset. You cannot really evaluate, but you can guess it's going. Yeah, you can speculate if it's going up or down. Your friend did a good job in speculating it's going down. But I've got that question as well from people around me. Say, okay, you're issuing a coin. Let me know when I can invest. I want to be the first. So if you are the first or the last, it doesn't really matter, because at the end, if you invest a euro now, the only thing you get back in 10 years from you is the same euro. So that's not the concept around. We're not even allowed to pay interest. It's also kind of a protective banking perspective under the regulations. So it's from that perspective, it's a boring product. I think it's interesting to do staking on layer 2s and other things with it. That are perspectives you can work on. But for us, we don't pay interest. A euro is a euro. It's actually quite boring.
Are there any other kinds of assets that can be used to back? Like, for example, I heard Tether used to make the claim, 1 for 1, and then there was speculation actually they might have bought a bunch of Bitcoin and then inflated the price of Bitcoin, and so they weren't actually 1-to-1 USD in a bank somewhere. Is it just euro, or can you use other things for backing it as well?
It's euro money market funds. That's it. It's all it's pretty clear in the regulations what you can and what you can't use. It should be a highly rated European paper or euros, and a certain amount should be available in euros. So it is a different game there.
Yeah, like you say, you want it to be boring, right? You want it to be stable.
I don't want to be boring, but at the end, the product is boring. As long as it is boring and stable, it's good. And then we have kind of a boring product, but in a very interesting market.
Sure, yeah. Well, let's talk about that. Let's talk about the market. How has the competitive landscape for stablecoins globally changed over the last couple of years? Say since Luna.
I think with everything which goes wrong into the stablecoin market, Tether gains market cap. So the trust is very important in this market. What you see is regulations coming up, transparency is becoming an important topic. So stablecoin issuers, stablecoins are gotten a lot safer, and there's a lot less experimenting going on. Regulatory frameworks create adoption, other pressure. It's all about adoption now, and see how you can make it more effective and better be used than you currently use fiat in the crypto space. But start using stablecoins here, and that has some clear advantages.
Yeah. What are some of those advantages?
I expected that question. I think to take the example of a market maker holding fiat on crypto exchanges. You run into problems. If you trade on 5 different venues, you have to have fiat backing on 5 venues. With stablecoins, you can easily move it around. You can trade and provide the liquidity where the liquidity is needed, and not hold a certain amount everywhere. So that's a big thing. If an event happens in the crypto space, which often happens in weekends or festive days, because there's also quite some retail trading. If that happens, you need to run into a problem with the banking network if you want to increase your fiat positions on certain exchanges. Because you cannot do a transfer. With stablecoins, you can mint, you can redeem, you can increase those amounts. So we're way more flexible in creating those solutions and creating a more efficient solutions in the stablecoin space. Also from a derivative and collateral perspective. And the standard derivative markets were, of course, 9-to-5 markets. in which it was trading during office hours, which were the same as the banking hours, so that all worked out. Now you're on a 24/7 market. If you want to liquidate the position in the weekend, don't use fiat. You cannot have fiat. So on your license, you have to hold fiat often as a derivative exchange. But how do you do that if you are open in the weekends? So shifting a movement between fiat and stablecoins creates that these markets can effectively be managed 24/7. So that are one of the first easy adoptions of stablecoin cases where it actually makes sense to move from fiat to stablecoins.
Yeah, there are no weekends, right? And being global as well, there's no Monday and Friday. Monday morning, where you are is already Tuesday, perhaps for somebody else, or vice versa. And so it's a big ask to try to conform to a particular jurisdiction's 9 to 5. That's a crazy thing in our day and age. What do you think? What's it going to take? Is it MiCA and seeing how it works in Europe? Is that what's going to take for the US regulatory landscape to change regarding stablecoins in the next couple of years? Do you think is it too political? Is there no goodwill, no will to do it? Or is it like you said with the banks before, there's just no incentive to provide clear regulations around stablecoins? What do you think it's going to take? Or how do you foresee that perhaps proceeding over the next months and years?
The US is an interesting jurisdiction at this point. Upcoming elections in the US. Maybe I'm a bit biased because I'm in the industry, but you actually see crypto become a topic in the elections these days.
Yeah.
Which president, what are their stance on crypto and crypto regulations and market adoption, ETFs. So it's 4 years ago, it definitely was not a topic. It was a waste of time. If you would talk during your campaign about crypto, you wouldn't gain a lot. Now you see it's becoming more of general interest, and we are in the middle of this industry, so we are maybe a bit biased, but it's getting there. So it's getting a topic, and there's so much movement around crypto regulations, enforcement as well in the US. So definitely it's going to be there. I think the main question from a US perspective, also with the elections, is it going to be federal or state? Because you see a lot of state movements around crypto and stables. So if there's no federal action taken, probably it will be more on the state level, or it's federal and it's just one enforcement. It's also, I think they are very closely looking at MiCA there, because if MiCA is really going to be effective, that's a very good blueprint of how to do it on a federal level. So depending on the November election, you have hope that something will happen in the near future? Like you've laid out a path to that future. Well, what do you, if you want to put a percentage chance of that actually happening in the next, say, year or 18 months, where do you think we sit in that? I think it's a pretty big chance. Something will happen, sure. Federally, I think something will happen. Only it's if, for instance, now with under MiCA, the door is wide open for fungibility. That would maybe say, okay, we can regulate the space, but we cannot control the space. So let's wait and create something completely new. But if there's a rule set which is effective and you can copy 80% from your perspective and implement it and have an effective bond landscape, I think there's a good chance also for the US.
Yeah, I agree.
And for us, it would be great, by the way. For us, it would be great because simply what we now have, we cannot accept any US clients because of the uncertainty around stablecoins in the US.
Yeah, which again, it is nuts. And like you mentioned before, instead of having the 500 different banks having 500 different APIs, but rather having one standardized approach, and if that could be MiCA, with maybe some jurisdiction or nuance, where you can largely expect know what to expect in any given jurisdiction. I think that'd be really, surely helpful. Like you say, man, I don't know if there is will to let go of the reins or to kind of let go of control in that kind of sense. In particular for the states where they are still clinging to, perhaps, being the reserve currency. I think that surely there's some element of national risk involved in letting go of that to a stablecoin, even if it's denominated in USD.
Yeah, absolutely, but there are risks on both sides. Not doing anything creates a risk because more and more will be USDT in the market, and that will grow, which also implies a risk here because it's certainly not US controlled. So doing nothing is a risk, and doing something is also a risk because you compete with your current fiat offerings, and it's the way it's currently controlled. They are happy about it, but you cannot stop innovation. In the long run, you cannot stop. And you will get other providers growing into the market, which is, the longer you wait, the harder it is to enforce in the later stage.
Yeah. For you, obviously, you've gone really all in, at least at this stage, on the EURR-backed stablecoins. How much traction do you foresee? Obviously, a lot, because you've gone all in on this, but what's the projection, or what are you anticipating will come about over the next, say, 6 months to 2 years in terms of stablecoin adoption in Europe? Now there's this regulatory framework. Now there's more and more people holding assets or holding digital assets. How big and how fast do you think this is going to go?
Good question. Take it step by step. Our first market is the crypto market. We, as I just said, we have fiat solutions, making that more efficient. And we have a demand in the market for Eurostablecoins. So we are creating the crypto market, collateral, slowly. That's our first market. But talking 3 to 5 years from now, that won't be our biggest market because payment will be bigger, we know. So we are now making great partnerships within the crypto space, but also we have room to create new partnerships in the payment banking sector, because those, in total numbers of supply for stablecoins, those markets will be bigger. And that's also that's working with next to crypto with banks, payment providers, layer 1s, layer 2s, to actually create an ecosystem to serve the complete market. And stablecoins going to be a substantial part of that. How big it's going to grow, it's hard to put a number on that. I thought personally that the Eurostablecoin market would come up earlier, but I think the liquidity in USD was that good, and the Euro fiat solution was sufficient that it took time. We now see that shift. It will grow. It will grow rapidly, and we will have, especially in the crypto space, USD stablecoins and Euro stablecoins regulated from Europe, but also moving into future payment and banking. In Europe, there's also a lot of USD transactions outside of crypto, which the fiat rails for Euro is still acceptable. The fiat rails for USD in Europe, it's outdated as well. So there's also a big need to be solved. So I think in all these different perspectives, the market will grow. I cannot give you a number, but it's going to be substantial.
And what do you think is many of our listeners are builders, innovators, even like developers, founders. Where would you say, where are the opportunities at the moment regarding payments or stablecoins in Europe in particular, but perhaps globally generally? Do you think, are there any things that you're like, oh, it's crazy nobody's doing this, or why aren't more people looking over there? Are there any of those kinds of opportunities that obviously don't share any of your trade secrets, but if we can talk more generally, are there opportunities that you think, man, there should be a gold rush in this space?
FX. We're replacing the current FX solutions with stablecoins is of course right. the big market which could be replaced. Especially the simple retail payment settlement FX. It's a huge market which is very inefficient, which could be easily replaced if there's enough liquidity in that market. So that's a focus, but there are quite some initiatives coming up around that from a builder perspective, because that one is recognized. I think building innovative solutions around stablecoins and build earning products based on stablecoins. So stablecoins cannot pay interest, but layer 2s do offer solutions for having more supply of stablecoins on the network. If they have more supply, they can more effective create liquidity around that. So I think in that ecosystem, let people make money with the stablecoins holdings from a technology perspective. I think that's one of the areas where more focus will be on and where real opportunities lie.
Yeah, man. Okay, that's cool. Lastly, one of the questions that we like to ask all of our guests is, do you have any particularly contrarian views in terms of, it could be specific to crypto or stablecoins, but even more generally, things that, you're swimming in one direction where everyone else seems to be swimming in the other direction, or you're looking over here, but everybody else is looking over there. Are there any ways you are swimming against the tide, perhaps? Or things that you expect to be a big thing that most people don't, or things that you think won't be a big thing that most people think will be a big thing? Anything that can help our listeners today?
I don't have contrarian, but I think that the usage of stablecoins outside of crypto could rapidly go to a huge market. I think that one is the only one I see going faster than I actually expected. Crypto adoption went slower, but this one I see go faster than my expectation. And I sometimes heard numbers from partners I'm talking to that I think, okay, this could be a real outlier in the next 2-3 years, which nobody expected. It's the growth of stablecoins in other solutions in crypto, and mainly in the financial world.
All right. Well, thank you so much for joining us on the show today. Really appreciate your time. So would like to hear more from you personally, or find out more about Stablr or Stablecoins. Where can they find you online?
The easiest way is X, GW Stablr. You can find me on X, LinkedIn, of course, with my very difficult name, Gijs op de Weegh. It's hard to pronounce, but if you put in my first name, you probably will find me, GIJS. On all kinds of socials, we are around Stablr, Stablr.com, and always happy to talk more in detail about the subject, because for me, it's the most interesting thing I've done in the last 25 years.
That's great, man. Again, thank you so much for joining us. And looking forward to seeing, man, it'd be really interesting to get you back on the show in about 6 months' time to see, in fact, what has happened with Mika. How has that rollout gone? Cool. How are other jurisdictions looking at it, adopting it, etc.? That'd be really interesting.
Great, let's do so. We do it after the US election, so we can see what's happening then.
Good one. All right, good on you. Thanks again.
Great. Thanks a lot.
Thanks for joining us today. We hope you enjoyed this episode of the Off-Chain Podcast. We love bringing you great guests like Gijs, and hope we've inspired you to learn more about Web3, about technology, and to think about the future and how you might be involved in building it. As always, like, subscribe, and better yet, share this episode with a friend. Help us spread the word, and join us again next week for another exciting episode of Off-Chain. Till then, take care.